macros. Less than 48 hours to go for the government to release the GDP data for Q4. Brokerages paint a mixed picture, but the majority expect GDP for the full year to meet the government's projection of 7.6%. Sapna standing by to tell us what the street is expecting as far as the Q4 GDP print is concerned. Sapna.
Well, there are mixed reports that have come in from various brokerages as far as India's Q4 GDP print is concerned and what the final number for FY24 could be. For instance, Citi and ICRA's growth forecasts are a bit subdued. In comparison, JP Morgan, Morgan Stanley and of course SBI Research are comparatively bullish. So, for example, JP Morgan, what it says is the fact that, on the back of stronger than expected manufacturing exports as well as domestic public investment, they expect the Q4 GDP print to be around 7%. This would also push the entire financial year's outlook up to 7.9%. Morgan Stanley too expects the Indian economy to expand by 7.9% in the previous financial year, and the growth outlook, of course, is positive. SBI Research is one of the most bullish. They expect the Q4 number to come in at 7.4%, and this will take the entire year's number to 8% growth. Citi, of course, is the most subdued among the lot. Citi expects a considerable, fall in the Q4 GDP print, almost by 2% from a high of 8.4 in Q3 to 6.5% for Q4. They also expect the GVA to be slower at 6%, and for the full financial year, this will bring the number to 7.7%. That's how much they expect the Indian economy to grow by. But let's keep in mind, this is still 10 basis points higher than the NSO's estimate of 7.6%. ICRA, of course, they expect the Q4 number to kind of moderate to 6.7%, but they expect a big fall in the GVA from 6.5% to 5.7%, and they expect the full year's growth estimate at 7.8%. Of course, this now brings us to what the government's view has been. Well, the CA has been pretty much clear that on the back of strong Q1, Q2 and Q3 numbers, for instance, the first 9 months of the current financial year, India has grown by 8.2% in the previous financial year, and so the CA says that this is going to help, maybe bring the full year's number to 8% growth level. Again, in the current year, a lot of estimates have already come in, right from MDBs to a number of brokerages, and their growth forecasts anywhere between 6.6 to 7% for India. Of course, RBI and ADB at 7%, World Bank lowest at 6.6%, and the government's view as of now is that this could be an underestimate, but that would be dependent on geopolitical factors as well as how the monsoon progresses. And beyond FY25, the chief economic advisor himself expects India to grow at a steady pace of 6.5 to 7%. So that's going to be the normal going forward.
Sapna, many thanks. And of course, do stay tuned to CNBC-TV18. We will bring you all the details from the Q4 GDP print on Friday. Now, the global economy, the World Economic